TV18.
Election season is over, but budget season has now well and truly begun. Joining us here to talk about the state of the economy, the budget wish list, the wish list from the MPC and a lot more on the state of the economy is the top brass of the Confederation of Indian Industry. Gentlemen, thanks very much for joining us here on the CNBC TV18 special. Mr. Kirloskar, I'm going to start by asking you, as I said, budget season has begun. We've got a new finance minister in North Block. CII has already presented its budget wish list to the government. But, if I were to ask you to drill it down to the top 5, because you go with a long laundry list of asks from the government, if I were to ask you to drill it down to the top 5 that you would present to Nirmala Sitharaman today to get the economy moving on a high growth trajectory, what would those be?
I think the first one would be domestic consumption. How do we increase domestic consumption? Exports are of course there, but the world economy is also having some constraints. So domestic consumption is the first thing. How do we increase domestic consumption?
So what's the prescription?
So one, obviously some of the issues are liquidity due to the past NBFC crisis. Perhaps tax rate, how to have more money in the hands of consumers, how to increase the confidence level in the economy, get some kind of a I think someone else, Uday will speak on animal feel into the economy. This is the first major point I think we need to do. We need to look across all tax rate. One of the ideas we have suggested is on reduction of corporate taxes and reduction of removing all the exemptions.
Yeah.
That's one.
18% is the demand that CII has put forward to the government.
With zero
You're
exemptions.
really hoping that that's going to happen. I mean, 25% hasn't happened for people like you. So do you really believe that 18%
Well, this is a new government
is
with a lot of new ideas. They want to do something. We really need to kickstart the economy. We need to get into a 10% growth rate if we have to satisfy the demands of our rural and our young people.
Okay.
Otherwise, so I think something more aggressive has to be done.
Something more aggressive has to be done. That's the view there from Bikram Kirloskar, president of CII. Uday Kotak, let me start by asking you, sir, we've been talking about unleashing of the animal spirits for a very long time now. What would be the top priorities on your prescription list in order for us to be able to do that? I mean, 18% corporate tax rate, I'm not sure whether that is something that the government may consider doing at this point in time, given the fiscal constraints and also the revenue buoyancy hasn't been as per expectation. So what would you realistically expect and like to see?
If you look at the Indian economy, it's on two legs, consumption and investment. Consumption has slowed down recently, but for the first few years of this previous government was in good shape. Investment is where the challenge is. And within investment, the government has invested pretty actively over the last 5 years. It is private investment. And in order to get private investment back, we need entrepreneurs to feel like putting money to work.
Okay. What will get them to feel like putting money to work?
I think...
is there demand for them to be able to set up additional capacity, fresh capacity?
I think it's chicken or egg. This is probably a very good time to really put up capacity with a 5-year view.
Okay.
I would go for smart capacity addition. I would like to see, obviously, interest rates need to correct downwards. I would like to see liquidity continue to get better. And we need to also make things easier. If you look at the entire situation, there's a lot of preemption of high rates of interest paid on savings. For example, small savings rates by the government. They're much higher than the deposit rates of banks. Therefore, if banks have to get deposits, there has to be some parity in how the interest rate cycle works. Similarly, tax exemptions on debt instruments should be corrected. And finally, equity investors must feel that it is better to invest in equities. Today, there are 4 taxes on equities. Number 1 is corporate tax. Number 2 is dividend distribution tax. Number 3 is tax on dividends, about 10 lakhs. And number 4 is capital gains tax, which has come back. So we need to encourage equity investment to get the animal spirits back.
Of the 4 that you mentioned, and I'll pick up each of these points, but on the equity part, of the 4 taxes that you mentioned, capital gains was brought back. Do you believe that there is a case today and for a rollback, and do you expect that?
I think if we want animal spirits back, people should be ready to invest equity into new projects. There is a challenge for equity savings in this country as the traditional promoter class has got into hibernation. We need to get equity and risk capital and risk appetite back.
Okay.
And whatever we need to do, it must, number one, make equity more attractive compared to debt. And number two, entrepreneurs must feel like putting money to work.
Okay. Since we've got the MPC coming up, and the CNBC TV 18 Citizens Monetary Policy is very clear, unanimous in its view that 25 basis point cut is what the MPC should move with. Let me get all four of you to comment on that, and I'll start by asking you, Mr. Kotak, expectation of a 25 basis point cut from this policy, but what's also the rate outlook for the year? And do you expect a change in stance as well?
See, number one, I think 25 basis rate cut is reasonably baked in by markets, but it has to be combined with transmission. And for banks to transmit, they need their cost of deposits to come down. For the cost of deposits to come down, alternative instruments should be at reasonable parity.
Okay.
And this is where the issue is. Small savings even now pay over 8%. And a 20% of delta mobilization of fiscal deficit is coming from small savings at much higher rates than government securities rates.
Right.
So bring parity back and make sure that transmission of rates happens through better liquidity and lowering of deposit rates.
Do you believe that there is a need now, and we've discussed this in the past, but given the fact that Mr. Kirloskar also talked about liquidity, that a CRR cut is warranted, and do you see that as being something on the cards?
I would like to see it, but I would be surprised if it was done now.
Okay.
The good news is oil is under control.
Okay. TV Narendran, what's the expectation as far as the MPC is concerned on rate cuts? And then I'll address the issue about fresh capacity.
Sure. I think I agree with Uday. I think 25 is kind of factored in already, and I think that's the least one should expect. Certainly, to me, liquidity is a very, very big issue. Money needs to flow into the system. I think over the last few months, while various actions have been taken, it's not been effective enough, and a lot of money stopped flowing just before the elections. So I think the rural economy is also...
So this is largely the NBFC spillover that continues to impact sentiment.
And the government spending as well. I think a lot of the construction activity which had started off slowed down a bit because money was not being paid, and there are many in the construction industry who have not been paid, and that has a trickle-down effect on many industries, whether it's the equipment manufacturers, whether it is the money flowing into the rural markets. So we're seeing that in rural markets where till September things were looking quite decent, things have slowed down, which is reflected in, let's say, motorcycle sales and things like that, right? So we hope that money will flow back into the system, and the second half of this year will be better than the first half.
So given the infrastructure focus of this government, I mean, if you look at their manifesto, the budget outlay or the expected outlay on infrastructure over the next 5 years is significant. Given that, to pick up on Mr. Kotak's point, will we see people putting up fresh capacity, even though in a lot of industries, across a lot of industries, you've now got capacity utilization at over 70-odd%. So do you see that we are going to see the investment cycle kick off, which has been the expectation for a while? Yeah,
so I think one is if the money spent on infrastructure as promised, it will certainly help the demand side. But more importantly, people don't put in money because it's not just demand they're looking at profitability of the business, right? And that is linked to the cost of doing business. So to me, the availability of money, the cost of money coming down, and spending on infrastructure reduces the cost outside of the factory gates. And I think that's a very important part of the cost that we incur before it reaches the customers. So I think infrastructure spend helps demand. Infrastructure spend brings down the cost of doing business, and if alongside you have actions taken on liquidity, I think the profitability outlook for industry picks up, which will hopefully spur more investments. Okay, CB, we've got the second innings of this new government starting on a fairly delicate trajectory when it comes to the economy. I mean, growth has slowed down to a 5-year low. Unemployment is an issue that the government will have to address. Fiscal constraints continue. Global growth looks challenging at this point in time. So it's a challenging mix that the new finance minister is going to have to deal with, both local as well as global. What, to your mind, will have to be the key areas outside of liquidity, cost of doing business, ease of doing business, that they must focus on?
One of the things is a big chance being the budget coming up within the first 100 days of the government, so to say. One of the things that they should do is to really go out of the box. And one of the things that CII has suggested is to really look at certain sectors. Look at, say, for instance, a huge potential. You talked about employment. Let's look at a sector which can increase employment, which can increase your foreign exchange earnings, which can really trigger economy strongly.
Okay.
Say tourism.
Okay.
Bring in a tourism czar who will be able to change the complete spectrum of tourism. Similarly, in certain other sectors of the economy, on construction and real estate, if you have a similar intervention of that kind.
Yeah.
So empowered sort of intervention, and with one czar who was allowed to set a target, get the outcomes done, that would create a huge impact, and that would really have a huge trickle-down effect in various other sectors of the economy.
You're right, because tourism, for instance, or real estate, for instance, because of the multiplier impact, these are part of the recommendations that the Surjit Bhalla-led high-level advisory group has made to the government. Baba Kalyani's panel has made recommendations to sort of give a makeover to the SEZ policy, and the expectation is that if not in the budget, we are going to see some of this being rolled out within the course of this year. But Vikram Kirloskar, let me come back to you now. Consumption, and that has been the key driver. We've seen poor growth as far as auto sales are concerned. Is the worst behind us? What seems to be the challenge outside of the liquidity issues? I mean, because now suddenly everyone's talking about how in the last 3 quarters, the Indian consumer behavior has changed so much that now everyone's talking about Ola and Uber, not talking about personal car use. So I find that a little odd to contend with. What's going on in the market?
I'm from the auto sector, so
Yeah.
I don't want to talk about my company. But definitely, as far as the auto sector is concerned, there seems to be a structural change which has happened. It's the amount of metros which have come in the country all over. I think we used to have only Delhi Metro or Calcutta Metro. Now it's like 18 or 19 cities with metros, and they're growing everywhere. That's making a difference. I certainly think shared mobility is making a difference. And third is also the sentiment of the elections. That's what I'm hoping.
Okay.
On the most optimistic side, that people were looking for a good, stable government. It has happened, and we hope things will change as we go ahead. The monsoon seems to be good. Every year we talk about things are. Every time the monsoon is good, we have a good economy.
Yeah.
And I'm really hoping that will
so
happen.
far, the forecast is holding as far as the monsoon is concerned. But Mr. Kotak, let me ask you now, because we've had a vote on account, and a lot of what the government had promised in the vote on account, for instance, the Pradhan Mantri Kisan Yojana, it was promised for a certain set, and now it has been universalized. That's one of the first few decisions taken by the cabinet. And clearly, agriculture seems to be the big thrust area. My larger question then is that, again, the market is sort of betting on strategic disinvestment, privatization, perhaps even bank privatization, and so on and so forth. My question to you is, given the fact that this playbook has worked so well for the government, why would they want to necessarily do anything drastically to change it?
I think we have to think about the fact that political transformation of India has happened. Time now is to go beyond politics into economic transformation.
You talk about a software kind of approach.
That's correct.
Yeah.
I think I'm a believer that for making the economy click, this is a strong government which has the hardware in place.
Yeah.
Additionally, we need the software principles of markets to integrate with the hardware. And if we can get this mix, only then can we think about 9 to 10% growth, which is what India needs.
So give me an example of what you mean of convergence of software and hardware in this context.
For example, if you take the number one, we need to get rural demand back. So that I would consider as including this intervention is the hardware part of it. Therefore, you got money is in the hands of the people. On the software side, we just got to make sure that for really building investment and consumption, capital is made available on market principles for the right players so that they can go out there and invest and build capacities for demand which can happen through the hardware.
But isn't capital being made available for the right players today? I mean, you can argue about the cost of capital, whether it should be a certain percentage or not. But the question is that, if a Tata Steel or Mr. Kirloskar or you yourself look at wanting to raise money, would you not be able to access capital?
Shireen, what is happening is capital right now is available for a very narrow set of players. India is a large country, and if you want to get that last mile, you must get more free-flowing capital. For example, I would love to see a domestic private equity and venture capital industry build on, in addition to foreign savings, on domestic savings. This is one industry which has lagged behind from a domestic point of view.
Okay.
Again, the whole private equity industry globally has been built on the software of free market principles. So in addition to the hardware, get the software, integrate the two. And in my tweet, I've said this, Steve Jobs got hardware and software together to create a world transforming company.